Today's video is brought to you by Money Metals Exchange. Low prices, fast delivery, and trustworthy. Don't forget to check out their new Donald J. Trump 99.9 pure silver 1 ounce round. Beautiful coin, etched and design. $17.97 per American per ounce, as low as $1.74 over spot. Can't get better deals than that with Money Metals and Exchange. Okay, guys, what's going on, guys? We need to talk today about what's happening with gold, silver, and oil. Markets are kind of itching towards where they need to be getting, and this is kind of playing off on what is happening in the back end of the markets. Again, with money printing machines going full blast and derivative markets exploding by the seams, IOUs all over the place, and the ship I don't know, I don't know how to put this into proper context right now, but it's time to start really looking at things. Gold and silver are always on the back burners of a lot of the main investors and portfolios. A lot of gold and silver, people just kept it to the side, never really looked into it as much because of the better deals they could get when they're kind of manipulating markets and buying naked stock buybacks and naked back returns. It gets complicated, and now with Deutsche Bank, if you see what's happening with Deutsche Bank, it's absolutely phenomenal what's happening. The biggest behemoth bank in the planet 4 years ago was serving lobster and steak at their shareholder meeting. Now, this last meeting in 2019, they were offering wieners, sausages, and cornbread. So, there's an article about that. So what's happening, guys? So here it is. Let's take a look at the historical charts on spot silver. So here it is, guys. There's silver, where it's sitting at here. So we're gonna go for the last. Let's touch base on the last 5 years. So you see the spikes here in 2017 and then late 2014. Sorry, I remember those spikes. Let's look at year to date. Now you see the pattern of silver. Remember when it reached $40, $45 an ounce back in 2012? I remember that very clearly. I remember selling around here quite a bit of the physical silver that I owned at the bullion exchange, and sometimes the bullion exchange didn't even want to take it because they just felt that it was going to drop, that it was a flash in the pan. And a lot of people started racing to buy silver around this area, right? And a lot of people are sitting at a loss right now, because silver sitting right now at just around, I think it's around just around $16 an ounce right now. Yeah, around $16 and change an ounce, which is good. It's pushing upward, but we're gonna get the 2012 highs again. I don't know for 2020, perhaps, but this is a more steady. This is a lot more steady than this. This was steady. You knew where it was gonna go for the longest time, but then it started to trickle up when silver, started being used more, making appliances, making all kinds of stuff. And 2012 and 2014 is right here, where you saw this part right here. And that was huge. A lot of people investing in silver, and a lot of silver certificates out there too. I'm scared of silver certificates. I buy physical silver and gold. I don't buy silver certificates from the banks. And then you go call for it, and they're like, "Hey, man, let me tell you something. We mailed it out, right? And we're not sure if it doesn't reach you, it's your problem. Can I have a tracking number? Oh, we can put tracking on that." So that's how it works with those. So you gotta watch out. So there it is. So what are we looking at? We're looking at this to continue in this nice trend, but kind of tick upwards, nice and slow. We don't want another flash in the pan like this. But it did go on for 2 years, so year and a half to 2 years. So this is today's news here. Gold price is back near record highs. Silver rates rise. Gold and silver almost 10% since the start of this year. In India, India's gold consumption in June quarter rose 13%. So remember Kaiser reports when Max Kaiser was talking about the richest women on earth are Indian women, because they wear the world's wealth around their on their body, on their necks, and their heads, because gold. Indian women have a lot of gold. And okay, let's do this. Gold prices surged today in Indian markets in line with a firming gold trend on MCX. August gold futures rose 0.9% to 35,000 rupees, near earlier record highs of 35,409 rupees. Tracking gold, silver prices also firmed up, with September contracts on MCX rising 0.5% to 41,000 rupees. In global markets, gold prices had surged nearly 2.5% on Thursday after U.S. President Donald Trump said he would impose additional tariffs on Chinese imports. So this is kind of important because remember, we are in a tariff war right now. And with the U.S. looking to lower rates, it's not a good indication, because if the economy is doing well, why the hell would you lower rates? You need to raise rates. You need to get them back around 5 to 5.5%. You can't keep dropping rates if the economy is doing well. The job market looked good. I think they added 175,000 new jobs in the last quarter in the United States. I'm not understanding why they would do that at lower rates. It doesn't make any sense. Another article today by Kitco. Good website to follow here. Gold prices push sharply as traders buy the dip. So are traders looking for deals out there? Are there deal hunters out there? Well, let's find out. So you can see here where it is there, and then there's the July, August, and the August 2nd, July 31st, August 1st, and August 2nd close. So you're seeing the patterns right here. Very simple to follow. And there's a little blurb down here. Gold prices are sharply higher in the late morning trading Friday, as bullish traders took advantage of mid-morning dip to do some perceived bargain hunting. Bulls have a full head of steam heading into the trading action next week, and more upside in prices is likely, including new highs for the year. December gold was up $23 at $1,455.90. So I kept asking you guys, will we see a $1,500 gold price by Christmas? I've been asking that for a long time now. I think we will be seeing a $1,500 gold price by Christmas. And what is going on with oil? This is a very impactful article, guys, on light oil. This is a big deal, guys, because remember, one of the biggest commodities traded on the stock markets is oil. So let's take a look here, what's going on. So this is brought to us by our friends over at oilprice.com. They're really good. You want to probably save them on your desktop there. So we got WTI crude. Okay, it's what's sitting at 55.28. This is the one we usually follow. And then Brent crude, 61.37. And then the Mars US sitting at 57.45. The OPEC basket, I'm not sure how many countries are in that. That's 63.78. And the Urals, 64.30, which is always a little bit higher than the Brent and the WTI. Usually. Okay, light oil set to flood the global market. Here goes, people. Shale oil production growth to records highs in the United States drove 2.5 million barrels per day increase in global oil production last year. Despite the OPEC cuts, Italy's ENI said in the latest edition of its World Oil Review report, part of the company's World Oil, Gas, and Renewables Review. According to the report, the U.S. accounted for 88% of its growth in global production. I think it has to do a lot with Venezuela and Iran and tensions flaring up right now all over the Middle East. So let's see. While OPEC recorded a production decline overall on the on the back of the U.S. sanctions against Iran and Venezuela, which took off combined 800,000 barrels per day from the cartel's production in 2018. While the U.S. became the world's largest oil producer last year, thanks to shale, and found a place among the top 10 oil exporters in the world, it changed the blend mix to global markets to ENI. Okay, said its report. Thanks to the shale and portion of light sweet crudes on the international markets increased more than 20% at the same time because of sanctions against Venezuela and declining production in Mexico. A portion of the medium sour crudes fell below 40% of the total for the first time ever. This change in crude oil grade availability is changing the dynamics in prices. So this is a very important article, guys. Earlier this year, the prices of some heavy crude grades touched the premium to lighter grades on the concerns about the heavy crude supply crunch resulting from sanctions and OPEC cuts. Most OPEC members reduced their heavier crude production in favor of light and sweet grades used to produce gasoline. The supply crunch helped the U.S. exports in early June. Reuters reported that many as 6 very large crude carriers were waiting to load medium sour crude from the Gulf of Mexico for export markets. At the same time, the Gulf Coast refinery struggled with an excess of light crude produced from the shale plays nearby, the Premium and Eagle Ford. Interestingly enough, despite the looming new emission rules of the International Maritime Organization that will go into effect next January, ENI reported that the global production of medium sour crude, which has higher sulfur content than light sweet crudes, increased last year to account for 11.8% from a total to 9.9% a year earlier. At the same time, total sweet crude production inched towards 35.6% of the total from 36.3% in 2017. Amid these changing patterns of production, demand for crude oil last year continued to grow, despite the flurry of climate and emergency declaration prompted by protests and demands by environmental organizations. Now, a lot of people are saying, are the millennials going to destroy the oil market? Are the millennials pushing towards non-oil? Are the millennials have no idea what they're doing. No idea. Majority of them have no idea what they're talking about when it comes to understanding the dynamics in commodities and how. Just put it this way, a lot of millennials don't have 2 nickels to rub together, and I'm not trying to put them down. I'm just trying to. They do offer a lot. Future-wise, but they're the most heavily educated generation that there is the millennials. They're the most heavily, overly educated, but no, because, let's start drinking out of plastic straws, paper straws, but we still have plastic forks. Anyways, I'm not going to get into that. That's not going to work. They had the oil climate change summit this week, and they had 158 or to 200 private jets fly in to talk about this. Yeah, that's a great one for climate change, right? Good job. All right. Protest demands an environmental organization for governments to do more about the climate, the declarations and demands environmental organizations government do more about climate change. According to ENI, global oil demand rose by 1.4 million barrels daily, with Asia, specifically China and India, uprisingly leading the way. So China and India? Why? They're producing more? They're shipping more? Not in these tariff wars. They're building their armies. They're raising their armed forces. And what does it take? A lot of fuel. It takes a ton of fuel to build an army, to get, to keep upgrading your army and to keep up with demand, right? 2 largest economies on the continent accounted for the demand and growth. At the same time, in increasingly renewable Europe, oil demand remained virtually unchanged from a year early. Refining capacity also increased last year, with Asia once again leading the way. As much as 75% of the new global refinery capacity of 1 million barrels per day was built there. The new refinery we talked about a few months ago. The Italian supermajor said this year new refining capacity is expected, especially in China. New additions in almost 900,000 barrels per day are expected this year from the current 15 million barrels per day. So this is very, very important, because if the oil demand is rising roughly by 1.4 million barrels per day, price of oil will slowly start upticking in the markets. And with the crude oil grade availability now and the changes in the crude oil grade, I believe, in my opinion, that you're going to start seeing the prices obviously start changing with that, and more, I guess, cleaner oil, so the millennials don't freak out. And I just wanted to throw this out there. I'm a big believer that oil is severely underpriced. One of my trading partners that I talk with frequently, doesn't believe it, and he is hedging against it, or he's hedging against oil because he believes it's just going to go down. He believes it's overpriced. I believe oil is severely underpriced. Oil is one of the major commodities traded, and I think oil is one of those commodities that we're in so desperate need of. And if they were to replace every gas vehicle with electric cars, you know how much oil they'll have to bring out of the ground? We don't have enough oil in reserves to even replace a quarter of the existing vehicles that run off fuel to replace them with electric cars. The dashboards, the tires, all the plastics, all the different plastics and veneers and all that crap that's inside there. Yeah, it's a lot of oil to make all that, right? So anyways, let me know what you guys think of gold too. Gold markets look like there's a lot of investors sniffing around for deals. When you start seeing that happening, you know that the price of gold's good, because the markets are all it's all a scam. The markets are all rigged. The printing machines are on full blast. They don't care. I mean, they just quantitative easing, lowering interest rates, bail-ins. People now we got some sort of a thing going on in Australia. I made a video about that the other day, where the government wants to, they're at $10,000 per purchases now in cash. They want to bring it down to 5 and 2. But pretty soon you're going to be in Sydney buying your groceries in line, and your groceries come up to $1,009, and they're gonna ask you from sort of declaration from the bank where you got the money from. And then if you can't prove it and you're paying in cash, they're going to write you up and send it to the government to investigate you. So give it some time. It's going to get to that point. But they want to get into more of a digital mode and remove currency. Mom and pop's businesses will suffer. Hot dog stands on the corner will have to start taking your fingerprint or your chip or something, or your electronic debit, because they no longer will be accepting cash, because cash will disappear. So this way there won't be a runoff on the banking system, so you can't remove your money from the bank. And if you can't remove your money from the bank, there's no runoffs on the banking, and they could do what they want, and they could do basically bail-ins and use your money to bail out the banks that screwed up in the first place, and screwed up if you did get a mortgage from them, and they screwed you over before, and now they're screwing you over again. So let me know what you guys think in the comments below. Thanks for watching, and don't forget to hit the subscribe button. I'd like to hear your opinions. I do not offer investing advice. We just talk. We're just talking. Do your own research. Find out what you need to short. Find out what you need to go long on. Find out where the volatility and liquidity is. Thanks for watching, and don't forget to subscribe button.